Hello, everybody, and welcome to the second edition of Trading Gains and my attempt here to make a video for you guys at the weekly level. Happy New Year, everybody. It's 2024, and it's a brand new start for a brand new year, and we're looking to really kick things off well here for the new Trading Gains service. All right, so let's not waste any time here. Go right into the 10-year. So what we're looking at is is at a high level. So I really think that we'll probably see a pivot here in the next, probably week. Um, Everything here is looking like it's at a turning point, and I'll kind of explain why. And even though we just jumped right into it here, still want to give you guys some context. So if we're looking at the 10-year yield, everything is really, equities are very dependent upon it. So we see here that we've got this really long-term trend. And if we switch back to the weekly, you'll see here it's got this massive flag, but this has also been for decades, really. And now that we've finally broken out of this, just a technical, trading sort of chart pattern here, we're due for some sort of retrace. Now, these things happen pretty slowly, though. So if we're looking at this at the daily level, we see this big breakout here. And for those of you not super familiar with, Elliott wave and labeling these sorts of things here, I'll just give a quick crash course. So this is five-wave impulse structure. Markets move in fives and threes, and this impulse structure here, you can always subdivide it. It's in like a fractal sort of pattern. So that just means the pattern repeats itself in different time scales. So we really see here is this huge move up, and this is really just it's been from I don't know really the past couple years here, where we see this wave one, wave two retracement, and then you see a smaller subdivision here of this larger wave three, which is in white. Now now this blue line here, this is the overall 10-year view here. So I think we've seen our wave four, and we've also seen our wave two down here. Wave twos can be sharp, and wave fours can be kind of lazy, or vice versa. It's called the law of alternation, where you have one wave, or sorry, it's with wave two and four. Either four is a very quick wave, and two will be kind of lazy and meandering, or vice versa. Usually it's wave two, which is sharp. So now that we see, you can kind of see here this, the same sort of principle where this wave two, this sub wave two here in this larger wave three is a little bit lazy, where you see this wave four is almost like a V shape. So if you kind of think about it like, on the time scale that we see, this larger wave two here in the blue box, it's very, it's pretty sharp, I guess you could say, from a daily perspective. And then the wave four that we see here is a little bit lazy and meandering. Now, we did see this massive run up here, and what I do think we're looking at seeing is we've had nothing but a massive bond rally, really from October, and as we all know, that really coincided with if I look at something like ES, and if I layer in the 10-year yield on top of that, you'll see that it's very, very close. Let me expand that for you. So you can see it's tracking pretty well, and this is why I believe here that we'll see some sort of retracement. Now, let me flip back to the 10-year. Just wanted to show you the correlation, and that's also what this shows down here. If you see these little lines down here, what this means is this is the index correlations, or let's say VIX or DXY, gold, Nasdaq, the inverse related correlations for equities, and the covariance, or sorry, the positive covariance for VIX and DXY. That's what we see here for at least the assets that typically track with the yield. Now, just seeing here, if we zoom in, it kind of feels like we're at the top of a wave five here, and what gives me confirmation for that is we broke a wave three high, but also what we're going to see here, or at least I think what we'll see here, is we might see a shorter term move like this, where we might see some sort of retracement to make maybe a head and shoulders pattern, and then actually maybe some lower yields by probably the end of the year, and that might actually give equities a tailwind here in order to reach the stratosphere. Um, so if we look at this sort of pattern, we might see like a head and shoulders. And what this signifies here is that we can see the yield doing, I guess you could say, just heading straight down. And some of that is just because these bonds are paying high coupons, and people see that equities are really racing to the top as fast as they can without a pullback. So these bonds here aren't really looking like a bad investment. So even at now closer to 4%, this is still the 10-year yield. It's not it's not the 2 or 30 or the 20, anything like that. So without beating this to death here, what I really wanted to illustrate here is that we should see a pullback, or not a pullback, sorry, a retracement here, like a B wave, because again, markets move in fives and threes, and there's a possibility here that we might see a lower low, like a 3.66 for this retracement here, and what that means is it's just 0.768. It's a Fibonacci level where you take your lowest low in the preceding wave in the higher degree before, and the top of your last top, and the retracement is really a measure of how far this goes, and typically these are very accurate. Anytime you see a level that's pierced, like let's say this 618, if you see this pierced in a let's just zoom in here, and I'll cover more of these in some upcoming trading videos, but right now, if you see like a daily candle, let's say like on December the 14th, and we see it pierce this 618 level, odds are it's going a little bit lower than that. Usually, if you see a bounce like you saw here, where it's really really close to that Fibonacci retracement line, and it doesn't really pierce it and hold it, then or go much farther down than that, you should see some sort of retrace. So that's why I'm still a little bit cautious to say that the equity rally is completely over, that kind of thing, just because yes, we did have some sort of breakout here, and I'll show that in the hourly charts here in a second. But I think it's really important for you guys to understand what's going on with the yield, because that really is the driver of what equity prices are doing right now. Now, of course, going into the first trading day of the year, we might just see some position squaring and more grind as money managers are all getting back from vacation and stuff. But um, let's try to figure out where this thing is going. So with that being said, also just to be aware for the dollar also traces with the yield to a certain degree. Sometimes it can become disconnected, but for the most part, we are seeing these pretty clear 5-wave structures to the downside, where you can illustrate this here, where this you could say is, sorry, I already have this labeled. This you could say is like a smaller version of this 5-wave series up, and what you could argue, at least from wave theory perspective, is that this is just a larger, this is a larger like ABC up from the floor, and you could see something like this. And given the dollar's prior path, that actually looks like a pretty safe bet here. And again, we could retrace a little bit lower. This is a breach of the trend line. It's also it's also considered a back test of your upper trend line. But with the yield going down so fast, flipping back to the 10-year here, with the yield going back down so fast, with no real strong retracing up, things become a little disconnected with that. So once we move into, let's say, an hourly view, you can start to see the waves start to materialize pretty quickly here, where if we just look, at this from just a pure structure, we can see that we have like a wave 1-2 setup here to the downside, and then we have a pretty long extended wave 3. You can see there's some other substructures in here, but aside from all the technical jargon and whatnot, really what we're trying to look for is a termination pattern. Now, as we zoom in, we have some good news. Because right now this just kind of looks like an ending diagonal. And you could also, again, make the argument here that we see this typically with ending diagonals, this 1, 2, 3, 4, 5 tag for the trend lines. Now sometimes the trend lines can be breached, like at the bottom here we saw. I think that was mid last week. But also we saw a pretty strong reaction back. Where right now I think the 10-year yield is back testing this upper trend line here. And I guess what we can deduce from this is that treat every breakout like a real breakout, and there's always some sort of back test here. But with the trading gauge channel, we took out another TMV position up here, and this is right on breach of this upper trend line here. So what I'm expecting to see is not just not just like a retracement, but the start of a larger B wave. Now, again, I think go back to the daily here. Uh, why I think this is why I think this is a B wave is because this is a typical topping pattern for, this is just your normal head and shoulders topping pattern. And for the yield, because it went up so fast, just absolutely relentless this past year. Um, and also too with equities rising as well, that's something is disconnected. So what we're trying to look for is we're trying to look for a little bit of a retracement where we can hopefully profit on our TMVs or TMV positions, where cost averaging is at about 4% here. But if we do see some sort of retracement here to about this like 4.35, that's going to be a pretty healthy trade. So we just want to have some patience with that. But for now, just understanding that we might have a bit more to go on the sell side here for this 10-year. If that does happen, we want to switch to some equities. So I think ES is, or the S&P here. This is probably the easiest level, or the easiest sort of structure to grasp. Now, after I think I mentioned this before, where we start out here at the top, where this is like really early January of 2022, and we sold down pretty much the entire year until we get to this. Oh, actually, I think. Sorry, let's use Nasdaq. It's a better analogy. Um, so it still followed the same pattern. This wave two here that we saw was right at the end of December, and then we just sold pretty much the entire year with some brief bear market rallies here, in order to or just some bear market bounces here, like a buy the dip sort of thing. Now, after we had this bounce, and now we have this wave two low, that's actually right at the end of December of 22. So this entire year has been nothing but rally, just nothing but rally, except for, we see a very clear wave two and a very clear, bull flag here, and with this wave four. So now that we've got this wave five, typically wave fives, there's always one wave that extends when you're talking with Elliott wave theory. And if we measure this, we want to see that um, that this 1-2 setup here, if this wave three really did extend, it has excuse me, it has extended. Typically, it goes to 1.618. That is a normal wave three in a 5-wave structure. But typically, wave threes are the ones that extend. Now we did go up to 2618, which is pretty high. And most people thought we were going to reverse right around this 16175, but we ended up just cruising much higher than that, of course. And once we broke this resistance here at the July end here that we saw, and you can also see that with ES too. Once we broke this resistance, it was just nothing but more up. So heading back here to Nasdaq. Why I mentioned the wave three extension is because typically you don't see multiple extensions here, especially with like a wave five. So something is going on. It might have just been the time of the year, or position squaring, or maybe a lot of money managers missed out on the rally all the way from March, thinking that we were going to head back down here. But I kind of think that it's a combination of both. So now we're seeing our moving averages move up here. We're seeing all-time highs with a lot of these things, and um, I just kind of feel like it's a little bit of a calm before the storm. I feel like the equities went up just a little bit higher than what was realistic here. Like the forward PEs don't really make sense. The fundamentals are getting a little wacky, and also something that's really caught my eye here is this downward trend in volume. Now, sure, we could have, you could make all the arguments here that it's the end of the year. We didn't have a ton of volume, or we typically don't have a lot of volume at the end of the year, and that's what we see around here, like last year. But then also we see a lot of volume around last December, and this is not really, I guess it doesn't really matter, right? Like it doesn't matter what time of the year or whatever. If a chart position is in the right place, then it's going to attract some volume. It's going to attract some institutional buying. So long story short here is that even though we see some lower volumes here, we still see some higher activity when we've reached like a good support zone or some sort of top. But what's kind of concerning me here is that we're not really seeing a lot of volume as we've creeped up higher and higher. I think a lot of people here thought that. Let me zoom in a little bit. I think a lot of people thought that, including myself, guilty as charged, that this was a very, very clear cup and handle pattern. And these patterns are about, what was it, like 82% success rate with these, where then you would see this sort of move. Well, that's why we've seen just weakness with this top here, but the dip buying is just so strong that it's pretty hard to actually be a bear at this point in time. It's a great way to lose money. So trend is your friend, right? But once we broke the new high, with this back test here, probably should have overhedged long. But I guess really what we're trying to figure out is like, where is this going? Are we going any higher? That kind of thing. Um, so let's just go one more step up, and I wanted to spend more time on the overall structure of this uh, for tonight's video, just because I feel like it's a good inflection point, especially since we're starting the year. So with Nasdaq here, I do think this is a very, very clear 5-wave setup, and typically, and this also looks like a leading diagonal where we have some overlap here, which is a little weird of a pattern, but as soon as you get it figured out, then that's when they change it on you. But one of the I guess one of the schools of thought here, and this is I guess the scenario that I favor the most, is we see this sort of ABC structure where you could see a huge sell-off here. I mean, I don't want to scare anybody to death here, but I mean, it's a real possibility, and we need to be prepared for that. So how we want to try to play this is, yes, we could see a higher high here, which would give us this wave 5, which looks like it's already on the moon, but I don't think that there's enough fundamentals to support that. Corporations are going to start to report earnings that aren't as lackluster or that aren't as strong as people expect. The Fed came out and was super dovish, but I just don't think it's going to be it's going to be really hard to continue this nothing but crazy run in the moon here. So I guess to kind of wrap this up here, or wrap this part up, we do see strong correlations to the 10-year. And now that we've gone through that, you can kind of see here that this has really gotten out of whack. Like you see here in 2021, where the yield really, as the yield was rising, equities were falling. And really where we see a divergence here is where we're at, right around April, where we just see this, just continued upward movement. And then finally it was just a little too much. And that's where we see, the 10-year yield continue to rise. Sorry, this is inverted. You see it continue to rise, and then also, the equities needed to sell off a bit. So after this took a turn, then equities took another cue to blast off again. So I think that's why if we see a retracement in the 10-year yield, I think that's where you'll see equities respond negatively to that. So with that being said, let's take a quick look at the ES chart. So ES is a little different. This is a pretty clear ascending wedge, but it still has the same sort of structure to it as Nasdaq, where on the larger scale, sure, we could go a little higher. Uh, you know, 480, 4860 seems like a good number for now at least. But we could see, and I won't go into details about like what things are called or whatnot. I mean, once we get to that point, we can have that conversation. But for now, um, this is sort of what it looks like to me is a corrective sort of move. Because again, ascending wedge or extending triangle, whatever you want to call it here. There's many different names, but you can see a pretty clear. And again, like this is assuming the drawing is correct and assuming that the wave counts are correct. But the long story short of this entire thing is we are at some sort of local top here, where we have exceeded the upper trend line just by a hair. And that's why we're also seeing some sort of rejection here. And again, you can see it against this backdrop of volume, it's just fallen off a cliff. And that is very, very, a very, very telling sign that we are in some sort of topping sort of zone or pattern. Because yes, like these guys want to see all-time highs again, but I think we could probably tap, 4860, and then after that, one last hurrah here, one last wave five of five of five, that kind of thing. Um, and then we head off for a decent sized correction. I think like the 4400 region is realistic for some sort of like some sort of deep B wave here. If we just draw if we draw field level, usually in these sorts of triangles you see like you see bounces around these 0.768 levels or the 0.618 levels. So realistically, I mean, if it takes a couple months to sell off, like we saw here um, from July to October, we could also see some sort of corresponding move here where equities just sink for a prolonged period of time. But again, that sets us up for all-time highs and very large all-time highs. So I think we'll just have to play it by ear here. But for I guess for the most part, um, overall, I think that we're sort of hitting our head here against the upper trend line, and that's going to be a pretty significant event here. So look for some sort of selling here in the very near future. At least I hope so, because that should provide the market a little bit of balance. Um, so with that being said, I don't want to drag on too long, but let's get into the Nasdaq and go into the hour view. So looking at this is a very, very clear five-wave type of pattern, sort of like ending diagonal here. You see a 1, 2, 3, 4, and a 5, but we still didn't quite, crack some nice numbers like let's say 17,200. But still, this is the futures ticker and not necessarily the like let's say QQQ or SPY or something like that where you have some gaps. So typically when you see like a triangle here, that's usually like a wave 4, or it could be a B wave. Now, uh, or B waves are a little bit more difficult with these triangles because um, you're not quite sure which way they're going to break. So you could see something like this, um, where we hit up against a point of control, and this actually ends up being a much bigger ABC. And this is what I think is actually going to happen here, where we see something like this, where this triangle is really just more of like a just intermittent selling, and we might just see this overnight, and then maybe tomorrow morning they try to blast it up as far as we can go here. But and it might even retrace a little bit higher, but we have some resistance here at this 17,073 level. Every time this level's really been hit, it hasn't lasted very long. So like we had this big sell here back on the 20th, and then we also had another sell here back on Friday, but it really wasn't all that bad. But this is how tops develop, and it takes a long, long, long time for this sort of price action to really manifest in a selling. And you got to think about it like, if I have billions and billions of dollars, why would I want to sell down the market unless I was all positioned short? Then that's a motivation. But why would I want to sell or sell it on the market. If everybody keeps buying the dip, I can sell at the highest prices possible. So you want to take your foot off the gas of the selling when you keep having people buy your overpriced expensive shares. So at least that's how I'm thinking it through here. So that's where I think we're headed here for Nasdaq and for ES here. A similar sort of move you might see like this. Uh, ES didn't really see a lot of selling before, but it's got a lot of good support here at this 4780 level. Um, and from the volume profile you see here, there's a lot of sells at this level. So you might see some gamma acting like a magnet here to pull this down. Sorry, options gamma. But you also might see something like this on a larger scale where we have a higher retracement, maybe Monday or Tuesday, Wednesday, something like that, and just see more selling, more topping, more grind. Um, but it's still important for us to consider the bullish perspective, where we might see this structure just continue up, and we might just have like a quote unquote double top here, where we see this 4860 and or it's just like a slightly higher high. But I still don't think that that's unrealistic. So prepare for that. So let's just take another look here. Let's look at like gold. All right, so gold, pretty clear flag. I still think we could hit this 2105 level. Um, and again, we still need to just, the 10-year is such a huge key to all this. And if we look at like oil, for example, um, oil actually looks like a very, very good setup. These waves aren't correct, but um, this looks like a very, very good setup. And at the Trading Gains channel, we bought right around here, and we sold probably right around here at this like 72 or 73 level. Sure, we could have left a runner, but I do feel like this is a pretty easy setup here, where we should see a pretty wild rally. Um, there's the potential where we could even hit like, sorry, let me zoom out. Oh, that's messy. Uh, anyway, sorry, to illustrate just like an ABC up. Sorry about the mess on this one, but final price target here probably by summer is about 100. So I think that's realistic. Now let's take a look here at the Dow. Dow's still got this sort of same pattern as ES does, so really nothing to see here. For ERDI, this one is starting to look a little shaky here. This is a very, very clear expanding, um, sorry, like a megaphone sort of pattern. And watch out if we ended up breaking this 2000 level, because as soon as or this like 2010 level, I think, as soon as we break that, we'll probably see some sort of retrace up like a wave 1-2 setup, or we might see an extension here where the bullish case is like a 2100, but I think the 10-year really is going to dictate all this for us. All right, so with that being said, I think I've spoken long enough for this video, but I just wanted to try to reinforce the point here with you guys that we try to make the best decisions we can with the information we have at the time. And when we took a first TMV entry here, this could have been the good 1-2 setup, but instead we saw a pretty aggressive wave 5 down, and we also saw another run up with equities. But I really don't think anybody saw that coming. The market's just been on difficult mode if you're trying to be smart about it. But if you're being just a drunk smash the buy button monkey sort of thing, you've probably done very well in December. But to kind of wrap this up, I think it's likely here that we should see like a 5-wave up, sorry, like a B wave, 5-wave up here. We're seeing some sort of retest, but we'll probably see something like on the larger scale, where we might see something like this for that B wave that I was mentioning before. If we go to the daily level, sorry, it's getting a little messy, but we should see some sort of retracement. And as soon as that happens, equities will pull back. So I don't know yet if this is going to be like a wave 4, which sets us up for new highs. I just don't know. Um, all right, so that's pretty much it. Happy New Year, everybody, and I think we're really going to do some good fun work here in 2024. So thanks for watching. Bye.